Hey guys, people are paying way too much in taxes because they're missing out on tax deductions. More than 2 million people overpay on their income taxes every single year because they are missing out on tax deductions that can legally lower their tax liability. I even recently had a client who made over $500,000 in revenue, and he paid taxes on the full amount of revenue that he earned. Later, we learned that he had missed over $250,000 in eligible tax deductions that would have cut his tax liability in half. What I've learned over the years is that many business owners do not know what tax deductions are in the first place. And I get it, unless you got a CPA license and master's degree in accounting like I did, then you'll likely never learn this stuff in school. That's why in this video, my goal is to give you the best explanation of tax deductions so you don't miss out on another tax deduction ever again. Hi, my name is Sherman, a CPA with Life Accounting, a full-service accounting firm that helps small businesses grow and manage their finances. In today's episode, I'm going to fully explain tax deductions and tax write-offs. By the way, if you're new to our channel, then be sure to subscribe so you don't miss out on future tax episodes we're pumping out to help you save money and put that money towards growing your business. And by the way, the moment you take away something from this video, then please help me out by smashing that thumbs up button for me below. With that said, let's talk about tax deductions. In order to fully understand what tax deductions are, you need to understand how taxes work in the first place. So here's my quick 60-second crash course on how the tax system works. Now obviously, taxes are something everyone pays. Without taxes, we'd have no government, we'd have no military, no Social Security, no Medicare, no Medicaid, and other government programs. But fortunately, you pay taxes. And collectively, we've all paid over $3 trillion in taxes to the government in recent years to fund these programs. But not equally, of course. Everyone pays taxes based on their income. The more money you earn, the more taxes you pay. There are tax brackets based on each tier of income that you're in. Which brings us to our first deduction, the most common deduction, the standard deduction. The standard deduction is a deduction that everyone gets when filing their taxes. So if you're a single individual that earned $50,000 a year, then you'd automatically get a tax deduction of $12,000, lowering your income that is subject to taxes to just $38,000. This means that you'd only be in the 12% tax bracket instead of the 22% tax bracket that starts at $40,000 in income. This single tax deduction could cut your tax liability by thousands of dollars. And the best part is there are several different types of tax deductions that work like this. There are standard deductions, itemized deductions, and my personal favorite, business tax deductions. Because standard deductions and itemized deductions are very straightforward, the remainder of this episode will be spent on business tax deductions. Okay, so what are tax deductions? Tax deductions are eligible expenses that you can deduct from your income for tax purposes. For businesses, this would be business expenses that you incur. But wait, does this mean that you can deduct all business expenses? No. The IRS only allows you to deduct business expenses that are both ordinary and necessary to run your business. Now, ordinary means that it is common and accepted in your industry. Necessary means that it is helpful and appropriate to run your business. For example, an ordinary and necessary expense for a car dealership might be buying car parts, while for our accounting firm, it might be technology and software. Surely I couldn't deduct car tools for our accounting business. Anyway, the biggest thing you need to know about tax deductions is that it lowers your tax liability. So let me explain how tax deductions work so you can fully understand how you can lower your tax liability. Here's how tax deductions work from A to Z. First, you need to understand a few things: taxable income, tax deductions, tax liability, and tax credits. Now, taxable income is the amount of business income you received that is subject to taxes. Technically, all money received is considered taxable. Therefore, all business revenue in your company will be considered taxable income. Then there are tax deductions and tax write-offs. Tax deductions and tax write-offs mean the exact same thing and are often interchangeable. So when you hear tax write-offs, just know that they are really talking about tax deductions. And we've already defined tax deductions as ordinary and necessary expenses that you incur to run your business. So in short, taxable income minus tax deductions equal your adjusted gross income, also known as AGI. AGI is basically the income that you will report to the IRS. In other words, the income you are reporting after taking advantage of tax deductions. Your tax liability is derived by applying the applicable tax rate to your AGI. Then you'll know the exact amount of taxes you owe. Now let's discuss a very common misconception about tax deductions. Many people think that tax deductions are applied directly against your tax liability. So basically they think that if you owe $15,000 to the IRS and have $15,000 in tax deductions, then you would owe $0 to the government. That is not how tax deductions work. That is how tax credits work. Tax deductions are applied against your taxable income. Tax credits, on the other hand, are applied directly to the tax liability or the amount that you owe to the government. Here's a simple example. If you had $10 in taxable income and you could deduct $2 as a tax deduction, then your remaining income would be $8. If we assume your tax rate is 25%, then you would owe $2 in taxes. On the other hand, if you had $10 in income and your tax rate is 25%, then you would owe $2.50 in taxes. But wait, if you had a $2 tax credit, then you would only owe 50 cents in taxes. So again, remember that your tax deductions reduce your taxable income that is subject to taxes, while tax credits are only concerned with reducing your actual tax liability. Tax credits are dollar for dollar reductions in what you owe in taxes. They only come into play after your tax liability has been determined. Now, if you're interested in learning more about how to get tax credits, then check out my video on small business tax credits. All right, so by now you understand what tax deductions are and how they work. So now let's discuss how you can take advantage of tax deductions. Here are the 3 steps to writing off your business expenses as tax deductions. Number 1, make sure you have a business bank account. Be sure to separate your personal expenses from your business expenses by utilizing business bank accounts for your business. By having this in place, if you are ever audited by the IRS, which does happen, you can pull your business deposit statements that clearly show all of your business income and all of your business expenses. You don't want to have a bunch of personal expenses mixed in, making it more difficult to audit and, more importantly, harder to trust. Number 2, make sure your business bookkeeping is done. Writing off your business expenses should be a very simple process during tax time. You should already have your business expenses organized in financial statements and categorized by eligible expenses. For example, ideally, your income statement will list all of your advertising expenses, overhead expenses, and so on by line item. That way, your accountant can quickly and easily prepare your tax return to ensure you can take advantage of all tax deductions that you're eligible for. Now, if you need some help with getting started with your business bookkeeping, then be sure to check out my wife's video on Bookkeeping 101 for Business. All right, number 3, retain proper documentation of expenses. You'll need to maintain proper documentation of expenses that you are writing off. That way, in the event of an IRS audit, you can show them proof of the expenses that you have written off. Now, an IRS audit shouldn't scare you from writing off valid expenses that you incurred to run your business. Their job is to make sure that you are complying with the rules and regulations that exist. So instead of missing tax deductions, just make sure that you keep your ducks in a row. Have your vendors submit W-9 forms, keep up with your employees' W-4 forms, and also keep up with the receipts and invoices of things you buy so you can also display this whenever needed as well. If you do these 3 things, then you should be able to take full advantage of tax deductions and save big on taxes. There's so much that you can write off, like your expenses for your home office, technology, your cell phone, business mileage, interest expenses, and so much more. If you want to know the biggest tax write-offs for small businesses, then be sure to subscribe to our channel and then check out my video on the 14 biggest tax write-offs for small businesses. All right, with that said, let's go ahead and recap this video so you can get started on your tax deductions. Today's episode was about one thing and one thing only: tax deductions. What are they? As discussed, tax deductions are eligible expenses that you can deduct from your income for tax purposes. There's the standard tax deduction, itemized tax deductions, and business tax deductions. It's important to remember that tax deductions are applied to your taxable income, not the tax liability you owe. Tax deductions lower your income that is subject to taxes, while tax credits, on the other hand, are dollar-for-dollar reductions in the taxes that you owe. If today's episode gets you excited about saving big on your taxes, then be sure to subscribe to our channel so you don't miss out on future content that I'm pushing out to help you save big on taxes. And also, if just one thing helped you today, then I greatly appreciate it if you can help me out by hitting that like button below. All right, that's it for today, folks. I'll talk to you soon.